Another very popular topic that blew up on social media before Christmas, I tried not to get involved at that time, but I've collected my thoughts and will come here now, is the idea of whether retail traders should even bother to trade. There was this sort of discussion and this argument going on, and a lot of people in the industry, hedge fund traders in particular, saying that retail traders shouldn't really bother. So in this video, I'm going to give my views. Now, the first and most important thing that I want to say is that I never try to persuade people to become traders. This is a very difficult business. And outside of some of the things I'll discuss in this video, there are many reasons why trading is a difficult business. Even for professionals, every year, hundreds of hedge funds will close down over the decades. Even some of the biggest hedge funds have collapsed and closed, like LTCM, which I'll get to a second later in this video as well. So even for the pros, it's a very difficult business. I don't try to encourage people to become traders. My goal is just for people that have made that decision to become a trader or are making that decision. I just try to guide you with what I think and what I've seen in my experience is real information, and hopefully balanced information out there as well. And if people come to me for help, I'll try to help them as much as I can. So this idea that essentially what I saw from some people that I actually respect in the trading industry, people that I think are smart people and good traders, essentially saying that, look, retail traders, you could never be as good as me. You shouldn't even bother. Now, the first point I'm going to get to here is that kind of view is not new. Okay, I've been in this business for longer than most of those people, for over 35 years. And I've heard that all the time. As someone that was a floor trader, in particular, bank traders and hedge fund traders always look down upon floor traders. And why is that? Well, remember what floor traders were. They were essentially just people off the street, retail traders that went into a pit. They had good mentors. They were taught good trading skills, and they were able to profit from that. And they were able to profit from being in and out of this hedge fund and institutional flow, both as option traders, and as futures traders. And these, really smart investment bank and hedge fund traders, they hated that, which is why they campaigned heavily to close the floor down and put these people out of business. So it kind of, I've always heard this idea that, oh, you can't possibly be as smart as me. Remember, I was an options market maker. I didn't even complete high school math. So, the idea that I could take on, as I subsequently did, the inventors of the option pricing model when they were LTCM, I was being told constantly, because I was buying options, they were saying to me, Gary, you're wrong. You must be wrong. Do you know who these people are? They're much smarter than you. And it turns out that I wasn't wrong. And the trades that they directly did against me and my bank, they lost significant amounts of money. We became very profitable on those trades. And, if I listened every time someone said to me, Gary, or to other floor trader friends of mine, you shouldn't really compete. There's no way you can compete with these guys. Then I wouldn't be here now. I wouldn't have been there 20, 30 years ago either. So there's an arrogance sometimes, I think, amongst some people in the industry. I don't think it's very becoming, and I think it's quite condescending. Saying that, of course, the failure rate of retail traders is very high. And I think there are a number of reasons for that. I think, firstly, I think some people just not cut out to become traders. They don't have the attributes, but they might give it a go. It's like me trying to become a professional golfer. I might give it a go, but I don't have the attributes to do that, or a professional football player. I'm going to fail. And there's another point there. If you look at, for example, Premier League football academies, 98% of the kids that come through those academies, even 98% of the ones that are offered a contract at age 16 do not go on to become full-term professional footballers by the age of 18 or 20. Does that mean it was wrong or terrible for them to go through that process? Well, that's a discussion, but they'll still, it doesn't mean that they're bad football players. Okay. In terms of trading, yes, most retail traders will lose. They'll have a go at it. I don't mind if people want to have a go at it, but some people just not cut out for it. Secondly, I want to make the point that I think a lot of the reasons for the failure of retail traders is simply because of the way they trade. They essentially swallow the junk that the industry feeds at them. Now, again, we can debate who's fault that is that the industry, is that the junk operators, is that the people themselves? It's very hard. But I've talked a lot about this with technical analysis. The professionals know the technical analysis is just junk, right? But it's still the most heavily taught version of trading or trading style to retail traders. If you go to a hedge fund like Citadel, for example, and many of their peers, you will see desks that are trading volatility arbitrage, desks that are trading statistical arbitrage. There'll be all sorts of certain styles of trading that are kind of like the norms in most hedge funds and institutions. But you will not see desk trading technical analysis. The industry knows that. So again, a big reason here is the way that retail traders are trading. Also, the platforms they're using. If you're trading on these FX platforms where you're giving away edge and etc., and you're trying to day trade on them, your chance of success is deeply diminished. Now, again, part of this is an education process. If more of us out there were educating people, stay away from this stuff, then in that sense, we could improve the success rate perhaps slightly as well. But I do think there is still a niche out there, and it's a similar niche to the one that floor traders had. Go to someone like Nassim Taleb, who is, at the high level in terms of the intelligentsia out there of trading world, but he will say to you that he went to the floor to learn how to trade from floor traders. They were the best traders he worked with, and he learned from them. And I think that that's still the case. The best traders that I speak to now are people who were ex-floor traders. There's not many of them around, but they remain the best traders that I talk to and that I hear from. Their understanding of what's driving the market is still good. Their skill set is still valid today. The thing is, from the perspective of the quants trade in a very different style. The people, it's very different style that we can get close to. Often the style would be something that we would call a positive EV over a longer period of time. Each individual trade, they might not make money, but over time, the style will. Retail traders can't trade that way, shouldn't trade that way, shouldn't compete. And I think in general, retail traders shouldn't be trying to hold trades for too long. I just don't think they have the resources or the trading styles or skills to do that. But I think some of these quant style traders do have a blind spot, and that blind spot is for the now, what's happening right now. It's the now that causes hedge funds with quant focus to blow up. So if you go back even just a couple of months ago, October last year, in the crypto world, there was a big collapse of crypto assets. It was quant funds blowing up left, right, and center out there because the now was something that just doesn't come up in their modeling. I think traders who are skilled in the now, trading what's happening at this moment, would have recognized what was happening and could navigate through that. That's always what floor traders and traders with my skill set have been good at, getting through those moments. And I think that's a very different skill set. And I still feel that skill set has value. And in fact, looking at the videos that my students have sent in over the last few months, the quality of performance, I think, is better now than ever, which I find very interesting. I've had more very good videos sent in a row than I've ever had in the 3 or 4 years that we've been running the Norden method. So that tells me a few things. Number one, that the skill set is still valid. And number two, it tells me that, I'm able to teach it and people are able to bring that on board as well. And I think that that's always been the sort of niche, and maybe the only niche. I am not going to definitely say that's the only one that I kind of know of, but that niche of getting in and out of other people's business by trading in the now, understanding the liquidity. That's what the floor traders did. And, I've just tried to continue that tradition, really. And as I said, I think that the quant style and the really smart people out there, they are good traders. They trade in a different way, though. And I do think they have a blind spot for a certain style of trading. HFTs, well, I think that sometimes the quant style people think that HFTs are the ones that are making money in that particular style that I'm talking about. So therefore, you can't compete with them. In fact, HFTs are working at an even smaller time frame. And again, not necessarily focused on the now. It depends on how the algorithm and how quickly it can evolve and respond to changing circumstances. As a human, if I see a news article or something happening somewhere, I can respond, pretty quickly, instantaneously, hopefully, and that has some edge. So again, go back to what were floor traders. They were just retail traders who were basically had good mentors and good skill sets. They were able to navigate through, and they're still, a number of them still doing very well today. And I think this discussion of, oh, you shouldn't even bother, you're not smart enough to trade. Look, trading isn't about intelligence. Um, Despite the fact there are some very intelligent people on a quant perspective who are trading, there are also some very intelligent quants who are terrible traders as well. So there's both sides of that story as well. So, if I was to summarize this, I would say, my position is kind of a middle ground, but I do think there is a niche for people. It's just you have to understand it. You have to understand what's real in this industry and what's not real. You have to understand that things like technical analysis, FX platforms, etc., are unlikely to enable you to be sustainable. I've done another video, recently we've uploaded about the funding environment. That's unlikely to see you to be successful as well. So that's a model that's designed for failure. So again, there's no wonder that most retail traders will fail when they're on a model that is designed for failure. Again, the big issue here is for you, if you are someone wanting to trade for yourself, is learn what's right in this industry. Make sure your goals are aligned with what you're learning and with the firms that you're working with, and just make sure that you're trading a style that suits the skill set, the resources that you have as a trader, as an individual trading from home. Also understand it is a lonely business. That's another reason for problems. So try to build a community, a team around you, that you have, good mentors as well, and people that you can trust and rely on. So hopefully, again, this will give you my view on this particular topic. Please feel free to leave your comments, and I'll try to answer once I can.